Welcome, everyone. My name is Doug Bertram with MetaViewer. We're very pleased to offer you this webinar today, Achieving Best-in-Class Results in AP with ePayables. We're fortunate to have Bob Cohen with Arden Partners with us today. He's going to talk to you about a study they performed and surveyed, and talked to a lot of folks about AP automation and how it really helps them meet the needs of their organization and bring some more control, efficiency, and visibility. At MetaViewer, we sell a solution called MetaViewer that actually helps companies do a lot of those types of things, and so we're very fortunate to be a part of this webinar today and bring you Bob Cohen. With that, Bob, I guess I'll turn it over to you, and you can kind of introduce yourself and walk through the study.
Great, thanks, Doug, and welcome everybody. Thanks for taking a little time out of your day to spend with us to learn a little about how you can achieve best-in-class results with ePayables. So a little about me. I am the research director for Arden Partners ePayables practice. ePayables comprises invoice automation, travel and expense management, business commerce networks, supply chain finance, and a couple of other things. I have been in the industry for 15 or 20 years in the AP space and the payment space, so I know it extremely well. I've worked with hundreds, if not thousands, of clients over my years in the space, working with them to help them improve the efficiency of their AP operations. So a little bit about Arden Partners and who we are. We're a research and advisory firm that specializes on the source-to-pay space. That's all that we do. We have 3 practice leads. One is on procurement, one is on contingent workforce labor, and the third is on ePayables, which is my area of expertise here. We work with solution providers and practitioners to help them improve their operations in the source-to-pay space. We have a network of sites. The one that I am responsible for is called Payables Place. I put it up here in case anyone listening is not and watching is not familiar with it. It's a great resource to go to for up-to-date information on what's going on in the industry, subject matter expertise pieces, technology updates, and we do at least 3 updates per week. We take briefings from vendors and put them up there on the latest and greatest on what they're doing. We talk about what you might have missed in technology that week pertaining to the ePayable space, and then we do insights, subject matter expertise pieces on supply chain finance, on how to improve supplier activation, a whole wealth of things. So if you're not familiar with the site, I encourage you to take a look at it. So the agenda for today is we're going to take a look at the State of ePayables report, which Doug mentioned briefly, and this is our flagship primary research report that we do in the ePayables practice here, and I'll get into some of the background into that in a few minutes there. Then we'll take a look at, what does best-in-class really mean? What's the advantage? What are companies achieving by being a best-in-class type organization? Then take a look at some of the measurements and KPIs that these organizations are using to evaluate themselves, and things that you might consider in your operations as well. A friend of mine once said, you can't manage what you can't measure, and that's why measurement is so important. You need to take a look at where you are if you're going to improve. Then we'll take a look at what's on the horizon for AP. A lot of developments, a lot of technology announcements being thrown around. We'll take a look at what we see as some of the most critical, important developments in technology that are going to affect AP going forward. And then at the end there, we'll talk about wrapping it all up in some strategies for success and suggestions that we have for you for planning for AP's future. And then we'll get to your questions and answers. If you have any questions, please enter them into the toolbar on your right, and we'll get to them at the end of the session there. So a little bit about the State of ePayables report. This is a research report that we've now run for 14 consecutive years now. We go out and interview practitioners like yourself in AP and finance and treasury, and we ask them questions about their use of technology, the cost to process an invoice, a whole wealth of information that we obtain from these folks. Typically, there's about 35 questions there. And so this is what we're presenting today are the results from this year's study, the 2018 study. This year we had 161 respondents, and we get this data back and then we analyze it amongst my team and provide you with the research information here. A little bit about those 161 respondents. 2/3 work in AP, and that's great because this is talking about ePayables. But as we all know, AP is not an island. We're impacted by procurement, by treasury, by finance, by IT. So it's good to get their perspective as well. 47%, almost half, are director level or above. And, we want to get all perspectives from the AP clerk to the AP manager and all up. So it's good that we take a 360-degree view of who's coming on here. About half, a little more than half, are from large enterprises. So we have a good coverage of the small, medium, large enterprises. So it's applicable to any organization that's reviewing the data that we have here. Most of our respondents this year came from North America with about 2/3. The other, 3/4. The other quarter was from EMEA, and we had over 28 industries represented. So we're not just looking at one specific industry. So when you're looking at the results, this is AP across all industries. So the first question we asked, which is an extremely important question, was how valuable is your AP team to the greater organization? What do others in the organization think about AP? So the good news here is, for the first time, more than 50% thought that the perception of AP was exceptionally valuable or very valuable. So that's the good news. 52% of those companies responding said that their companies thought very well about AP. If you're a glass half full person, that's great. First year over 50%, so we're moving in the right direction. If you're a glass half empty type person, you say we still have a lot of work to do, because that means that 48%, so almost 50%, organizations, the view of AP is somewhat valuable or little value. So we still have a ways to go, but the good news is we're pointing in the right direction. The next question we asked was, how critical is data and intelligence to your finance team? We all see all the news reports, online, offline, about data. And, so we wanted to ask the question, how does your organization use data? Not surprisingly, over 80% of the organizations view data as critical to finance and to the organization. You might be asking, why is this important? The reason being, very simply, AP is sitting on a wealth of data that is generally untapped. And so with organizations viewing data as critical to their success, and AP sitting on this untapped goldmine of data, it presents a huge opportunity for AP to access that data and to mine information from that to improve organizational performance overall. We'll talk about that in a little bit. So, of course, no survey about ePayables would be complete with asking the question, how are your invoices being received from your suppliers? And here, even though we talk about e-invoicing, and we have for years, the survey respondents are somewhat slow to adapt and to change, and this is indicative of the overall industry. While we think that it's ludicrous that we're not sending all invoices electronically, the fact of the matter is that 45% of invoices are only sent electronically these days, and 55% are still sent manually. Now, there may be a slight deviation if you go to larger organizations versus smaller organizations, but the fact of the matter is there's still a whole lot of paper out there, and we need to figure out how we're going to handle that paper while we're converting suppliers to enable them to send electronically. So the next question we asked in our study was, what are the top 3 challenges facing your AP organization in 2018? So, not surprisingly, exceptions came number 1. Exceptions are the bane of our existence. An invoice comes in and there's problems with it, and we have to run around to try to get it approved. That was the number 1 response that we had there. The cycle time for invoice and payment approvals are taking too long. That invoice is out for approval. It's bouncing around. You don't know who has it. It takes too long to get to AP before it can be forwarded around for approval, coded, all those good things. And then, not surprisingly, this has always been in our top 3 for as many years as I can remember. There's still way too much paper that AP departments are facing and having to deal with. And, why is that such a big issue? Because paper is inefficient. We have to take that paper and get all the data off of it and put it into our system so that we can then manage and mine and automate and improve with that information. So paper still remains a huge challenge that's there as well. Now let's take a look at some of the priorities that organizations are looking at going into 2018. So if we take a look here, these were quite a number of responses that we have here. The good news is that many of these organizations that were facing the paper challenges, the manual processes, are looking to implement AP automation solutions. An equal amount, we're looking to reduce costs because processing invoices in a manual fashion can be extremely expensive. We'll take a look at that a little bit later on in some of the data that we have here. And third and fourth there with improving visibility into invoice and payment data and improving reporting and data analytics. Those two kind of go hand in hand. And that's what I was talking about with A, perception, and B, how important is data to your organization here. Those two speak directly to that. And it's good to see that organizations and the AP departments within them are starting to wake up, if you will, and realize we need to do a better job managing the data and making AP more strategic and less tactical. We do a whole lot more than just pay invoices. We're sitting on a wealth of information. How do we get that information out and leverage it so the organization can benefit from this? Doug, I got a question for you. You talk to a lot of companies out there, both customers and prospects. Are the priorities that we're seeing on the screen, is this in line with what you're seeing from your customers and prospects? Is this what they're telling you?
Yeah, definitely. I think probably the biggest things that, when I usually ask people, what are your objectives? What interests you? What brought you to us? Or what do you think we could do for you? And it's really that control, efficiency, and visibility that people are looking for. Your previous slides talking about, all too much paper and less time and exceptions and all those types of things. And all the things here are ways to address that. And we kind of see in that automation space, when you can be more efficient and you can have systems that automate the process and do a lot of things so that your people don't have to do that, it gives them more time to focus on those exceptions. And it also tracks more, like what you'll talk later too, the data, tracking that data and giving you those KPIs and being able to understand where are your exceptions coming from and allow you to proactively investigate those and then take care of some of that. So a lot of these are all these things that you see here in this bar are all kind of addressed by our solution in some fashion and help companies bring those efficiencies.
Great. And one other question you kind of brought up there, I wanted to get your perspective on. Does it surprise you that we're still seeing so much paper in AP? I mean, our slide there before said 55% of invoices are still being received manually by paper. Does that surprise you?
A little bit. I know from our organization perspective, our financial system just can automatically email invoices out, so it's pretty convenient for us to do that and take the snail mail out of the picture. But I also understand too, so if you don't have an automation process in place, getting electronic invoices are somewhat of a nuisance, because now somebody has to open up that invoice and then print it off so people can actually see it. Whereas if you have an automation in process that can automatically pull in that electronic invoice and then start processing it, it's way more efficient that way. And we do see that with some of our clients to where they didn't really proactively go after their vendors and start asking more and more of them to send them electronically, because it is somewhat of a nuisance to have to print them off yourself. But once they get the automation in process and they start acting on it and proactively asking the vendors to send more electronically, I think in at least in the case of our clients, that number of paper-based invoices reduces quite substantially.
Yeah, I have to imagine with your solution, once it's implemented, the amount of paper invoices that your clients are dealing with go down dramatically.
Yep, absolutely.
Okay, so let's moving on here. So let's take a look at best-in-class technology advantage. Sometimes we say, does it really make a difference if we use technology and automate and implement all these solutions? What's the result of this? Let's take a look at some of this here. So what we're looking at here on the screen is the instance of best-in-class organizations using a technology and all others. And for our study, we define the best-in-class as the top 20% of all respondents. So in this case, the top 20% of all respondents are best-in-class, and the remaining 80% are in the all others category. So when we look at document imaging and scanning, when we look at OCR, automated data capture, some of those are technologies that have been around for a long time, and it's not surprising that a lot of companies are using them or in practice today. And so the difference between best in class and all others, the use of those technologies isn't greatly different there. But we take a look at where the rubber meets the road here. E-invoicing. Twice as many best-in-class companies are using e-invoicing as opposed to all other organizations. We took a look at self-service supplier portals. It's 2.5 times as many best-in-class organizations have a self-service supplier portal in place and are leveraging that in their ePayables operation there. Having a complete procure-to-pay solution, so not just automating one piece of the financial supply chain, but taking a look at the entire chain. More than 2 times as many best-in-class organizations have a solution there. So you can see the other results, but some of the newer technologies are really where best-in-class companies are differentiating themselves and achieving real results here. So now let's take a look at, as I said, does it really matter here, the difference? So once again, best-in-class, top 20% of respondents, all others 80%, the remaining 80% there. So when we look at the cost to process a single invoice, the 80% typically costs about $14.50 to process an invoice. Best in class, by leveraging the technology that's available to them, are 5 times less expensive to process an invoice for their organizations. You're looking at roughly $12 an invoice here. If you think, we only have 1,000 invoices a month, that's $12,000 that potentially you could be saving on a monthly basis by automating and leveraging best-in-class technology. As far as processing an invoice, how long it takes from invoice receipt till it's ready for payment, 3x difference here. So the process is sped up tremendously. No longer does the invoice have to come in, be manually coded, be manually routed around for approval. You have to find out who has it and get it back and track it down, keep the information in a spreadsheet or a book. It's all automated. And so invoices are coming in and being routed around for approval, and available in 3 days. So that presents a whole lot of additional options when it comes to dealing with suppliers from a payment perspective there. Invoice exception rate, 50% less. So there's more work being done up front. So there's less exceptions that need to be handled by AP. If you remember, one of the biggest banes of AP in a previous slide was having to deal with invoice exceptions. By automating, they're more than cutting in half the amount of exceptions that AP needs to deal with. And if you're dealing with less exceptions, you can work on more strategic functions as opposed to more tactical ones, like trying to figure out, why this invoice was rejected, where this person is, et cetera there. Number of invoices that are submitting invoices electronically, big difference here, almost a 3x difference. Best-in-class organizations have automated solutions in place, and Doug mentioned those a little bit a while ago. Is if invoices can be sent electronically, they don't need to be touched manually, they can be automatically brought into the system. It's a huge gain, huge savings gain from a cost perspective, from an efficiency perspective, from an operational perspective there. And then, finally, also, if there's a PO associated with an invoice, the AP automation solutions can do automatic matching of an invoice to a PO, to the goods receipt, and process that much quicker, much more easily. Now, I know that many of the people listening in may not even have a PO system, and many organizations, such as services organizations, don't deal with POs. It's just another example of how automation, how best-in-class organizations are benefiting by leveraging the technology there. Doug, another question for you. Anything on this screen jump out at you?
Yeah, I would say, kind of the things, the electronic, the big difference between electronic and number getting things electronically. I think that's a big thing. We kind of talked on that a little bit, how when you have the right things in place and the right processes in place, you can proactively get more and more that way. And I'd also comment on the purchase order side of things too. And it really varies from organization to organization. You know, your larger organizations are going to probably utilize purchase orders to a much greater deal. And the interesting thing, if you can kind of start implementing those purchase orders, you know, and you're proactively knowing what I'm ordering, and so when the invoice comes in, that's where that straight through processing or that touchless processing, if it extracts the purchase order number off of the invoice and then compares that and does all those matches automatically, because you knew that invoice was coming in, the purchase order told you all that detail, and having the invoice come in and automatically matching to that purchase order, and if everything matches it and pushing it all the way up, really greatly increases the efficiency of an organization. So I understand why not everybody uses purchase orders, but I do see more and more clients that are starting to maybe use purchase orders a little bit more. And I think that straight through and that PO on your slide there really kind of accentuate where there's some big gains there.
Yep, precisely. So let's take a look into some measurements, common measurements, and some KPIs as well. So we break down the metrics into three specific areas: operational metrics, financial metrics, and supplier metrics. So when you're setting up your measurement program, if you don't have one in place, you want to take a look at these three areas here. You can't forget about your supplier metrics. If you do, you're asking for trouble. You need to take a look at the supplier's entire community that AP works with, and not just internally here. So let's take a look at dive into each of these a little bit more. Common operational metrics that you can leverage and that best-in-class companies do when they start measuring their performance within their organization is obviously what is the cost to process an invoice. Now, the numbers that we have on the screen there, they may be in line with what you are seeing if you're automated or if you're manual. They may be off. It all depends on how you're calculating the numbers here. But what's important to do is start measuring, start calculating in some fashion so that you can show improvement. We've got information, and Doug has information too, on how to calculate the cost for an invoice and what inputs you want to put in there and which ones you want to leave out. But the most important thing is you can't change the metrics that go into, or the inputs that go into the cost to process an invoice every year, because your number would be completely different, and it's not going to be valuable to you to see if you're, how you're improving by leveraging the automation. So take a look at how long it takes to process that invoice from the receipt of that invoice all the way through when it's ready for payment there. We talked about the number of invoices received electronically versus manually in paper format. Doug talked, about why it's important to receive it electronically and the benefits there. I mean, those are fairly obvious. How many invoices can each of your AP staff handle on a daily, weekly, monthly basis? We have metrics on what best in class looks like with a fully automated operation versus a manual operation. When companies grow and they expand and they add additional volume to AP, do you have the systems in place to handle this, or are you going to be forced to go out and hire additional people in AP to handle the additional volume? I'll tell you that most of the companies that we deal with, when they're facing growth prospects, the idea of adding more people to AP is not the direction they want to go to. They want to be able to have a system in place that says, you're doing 10,000 invoices a month, we're going to add another 50% to that, so you're doing 15,000, not a problem. Our system can handle it. Rather than saying, okay, each AP clerk can handle 1,000 invoices per month, needs to hire 5 more people. The benefit gains from an operational and financial perspective are much better when you're leveraging technology to do that. Take a look at exception rates. We talked about that. The number of invoices that go straight through from invoice receipt straight through to payment. No one needs to touch them. There's business rules that are matched against them. Yes, we ordered this. Yes, this is within price tolerance. Yes, this is what we're expecting. It happens as if someone actually looked at it, but it's all done automatically. How many invoices can go straight through? The more straight through processing of invoices you can have, the more efficient your operations is going to be. On-time payments, huge issue. I know one client, one multi-billion-dollar organization, services organization we dealt with, actually their credit rating was decreased because they were unable to pay their invoices on time. So they got knocked down by the credit rating service a notch because of their inability to pay invoices. As you might imagine, once their CFO, got off the phone with these folks and realized what was going on, they called the AP department and said, we need to fix this problem. They brought in an AP automation solution, and they got their credit rating back to where it was before because they were able to pay their vendors on time once again, and it wasn't negatively impacting the rate at which they could borrow cash. So extremely important there. The percentage of early payment discounts captured. Why is that important? If you can approve an invoice quicker and there's an opportunity for you to save money for your organization, even generate cash for your organization, you want to be in a position to decide whether or not that's something you want to do. You don't have to take every early payment discount that's available to you. Your treasury may say, you know what, we want to hold on to our cash this month, but next month we want to take advantage of these discounts. If it's taking you 30 days to approve an invoice, you're behind the 8 ball. But if it takes you 3 days to approve an invoice, you can come back and say, we're ready to pay these. Does it make sense from us, from a financial perspective, from a cost of capital perspective, to pay these early? Take a look at some of these things here too. So now let's take a look at some of the financial metrics. We talked a little about the cash impact from early payment discounts captured. Take a look at some reports. How much in discounts was available to us? How much did we capture? What are we leaving on the table? Important metric to see. You may decide you don't want to take these discounts. You may decide that you do, but you want to be in a position by automating that it's up to you and you're not at the mercy of somebody else in order to decide this. The most common metric, the financial metric, is days payable outstanding, an important metric to manage and to measure, to understand how long that payment is, or that invoice is out there for approval, and whether your firm is net 30 days and net 60 days, whatever it may be, whatever those terms are, you want to make sure that you're managing that and actively understanding the impact that it can have on your organization there as well. So some supplier metrics, extremely important here. Supplier inquiries, I mentioned this before. If in many organizations, I've seen studies that, let's say, a third to 40% of calls that an AP department is getting are coming from suppliers, wondering about the payment status of their invoice, wondering whether or not why they were paid a certain amount. You want to measure that. Ideally, you want to have no supplier inquiries because it's all being dealt with. Your suppliers are getting paid on time, and there's a way for them to go online and check the status of their payment. If you can accomplish that feat through the use of technology, as best-in-class companies are doing, then you've gained back 25 to 40% of the time that your AP staff was handling inquiries, and that time can be spent doing something much more strategic than tactically answering a phone and tracking down the status of an invoice there. Taking a look, as Doug mentioned, the number of suppliers enabled for e-invoicing, and then also the number of suppliers that you're paying electronically as opposed to paying via check. So just some common supplier metrics here that you want to take a look at. So take a look at the future of AP and some of the innovations that we're seeing here. I wrote an article a couple months ago talking about all the technology enhancements and introductions that we've had in AP over the past 5-10 years. And many of us on the line think nothing's really happened here, but nothing could be further than the truth than that. There's been a lot of technology advancements going on that have been applied to AP. And some of the major ones here are artificial intelligence and robotic process information. So we hear a lot about these, and we wonder, does it really apply to AP? How is it being leveraged in AP? But the short answer is yes. Solution providers are leveraging these new technologies, and some of them aren't as new. I mean, artificial intelligence has been around. It's gotten much more advanced, and to the point where it can be applied much better to the financial processes. And robotic process automation and machine learning. How are we taking manual tasks and automating those with a robot? So something that a person would have to do over and over, extracting data from a spreadsheet and entering that into your ERP system. There's a way to automate that. So these are two areas where we're seeing a lot of attention paid, and a lot of advancements are being made behind the scenes to make systems faster and better. Doug, talk to me a little bit about how you're using and leveraging these two technologies, and what the benefit is for your customers.
Sure. I just gave a webinar yesterday on this very topic, and you're right. Things have evolved. We're not standing still in a vacuum either. Probably 5-6 years ago, we created a best practices approach to automation, and we installed that as a base point for all of our clients. And we're up, I think, now on version 28 or 29 of that, and we keep leveraging the new technologies to do more things automatically. So very much better tight integration with your financial system to pull back defaults from the vendor record, so the invoices automatically get coded. That touchless processing, if extracting a purchase order number off an invoice and having the system do all the matching against the financial system, and then really nobody's touching it whatsoever. The ability to extract information, and so people don't have to manually enter anything into the automation system or the financial system. All of those are examples of how these solutions have grown, and our solution as well, to implement more and more of those tools to do more of the things automatically, and then frees up your time for kind of, as you mentioned, you're in a better position for growth to handle more volume as it comes in, as well as having more time to do some analysis and allow you to focus on that human aspect of things, where you can focus on adding more value, showing the organization how the AP department does add more value by doing some vendor analysis and negotiations for pricing and those types of things.
Okay. Another question. When you're talking to AP departments, do you get the sense that they're afraid of artificial intelligence and RPA and machine learning? Are they afraid that it's going to replace them? And is there a hesitation that they have looking at solutions for just that reason?
Yeah, I would say, we're kind of probably all a little bit afraid of that, right? I mean, you read the daily news, and there's, this artificial intelligence, and, there's the worries that the machines are going to take over the world and that type of thing. But, a little bit more specific from an AP perspective, I think, your directors and above, they're all looking for the strategic, systems for the organization. But maybe some of your clerks get a little bit worried about it. That is this going to replace me, or am I going to lose my job? And I can tell you, in the 12 years I've been at MetaFile, I know of nobody that got fired because MetaViewer was more efficient in their organization. What I think seems to more happen, I used to own my own company, and finding people is hard, right? I mean, it's an unpleasant avenue. And so if you get a system that's more efficient, it does position you for growth, so I can defer hiring additional people. And I've also seen a lot of cases where somebody retires, or somebody leaves on their own volition, and because the system is more efficient, organizations are postponing the hiring of replacements, and so the system can better handle that. So I think it's natural for people to worry about it a little bit, but I also believe that I don't see that to be the case. People don't get fired because the system is more efficient. It's best for the organization to have those efficiencies and have that bandwidth, and have your people start learning to add more value and do those analytics and those types of things. And that's why people don't really get fired, because there's more artificial intelligence, robotic process automation built into the systems today.
Yeah, I think that's critical. And anybody out there who's listening in on this, you shouldn't be afraid of AI and RPA and machines. What they're going to do, as Doug eloquently mentioned, was get rid of some of the manual processes, enable you to handle growth or handle retirement. But Doug also touched on it too. This is a huge opportunity for people in AP and people in finance to take their jobs from tactical, kind of more mundane tasks, and make it more strategic, looking how you can add value to the organization. So you should see AI and RPA as an opportunity to kind of grow AP and improve its importance within the organization, because now the manual tasks are being done by the machine or by the software. And you now say, okay, how can we add value? And that's really where the opportunity lies. So don't look at AI, RPA as a threat and be afraid of it. We're not going to bring in a solution because it's going to end up costing us our job. As Doug said, he's never seen that, and it's something that we haven't run across either. It's actually an opportunity to switch from being a tactical organization that's just looking at paying bills to one that's adding value to the organization. So an important distinction to make there. So let's take a look here. You know, we asked about this is the future. So we asked our survey respondents, you know, what did the future look like to them, excuse me. And so not surprisingly, 71% came back and said they expect to be more functionally collaborative within their organization going forward. And that is great. That's great news from my perspective, having been in the space for so long, because too often AP kind of lives in its own world and doesn't broaden out to the rest of the organization. And what this is saying is that AP is now looking to partner with the other organizations or other departments in the organization, such as procurement or treasury or IT or the business units. And that's important because that means that they're starting to think of how can we start adding more value. Because if you're doing things in your own vacuum, you're just paying bills and you're thinking like, this is the best process that we can do. But when you start talking to treasury and say, how can AP add value to the treasury function? Guess what? Treasury is going to say, well, we'd like to know as far in advance as possible, you know, what invoices are ready for payment and what discounts are available, so we can determine like if this is the best use of our money. So start talking to the Treasury Department. So collaboration was big on the list, high on the list, number one, and so that's a great sign for us. 2 years out, more companies expected to have full automation. So starting to take advantage of the technologies that are available to them. That's good. Once again, we're taking a look at how do we automate out the inefficiencies, become less tactical, and much more strategic to the organization here. They also, we're looking at becoming a much more technologically innovation-ready culture within AP. And that's also refreshing to see because they're saying, how can technology help us improve what we're doing there? So that's the right mindset. That's how you're going to improve the perception and the value of AP to the organization. And then also 2 years out, once again, going back to that data slide that I mentioned before, 44% of the respondents said they expect AP to be more of an intelligence hub. And that's great because they're starting to look at all this data we're sitting on. How do we leverage it to benefit the organization? And so that's encouraging as well. Now, we took a look at, we asked them 5 years out. Now, 5 years out, as we all know, is tough to plan. You know, many people say, I can't plan a week out, let alone 5 years out. But we asked the question too to kind of say, you know, what does the future look like 5 years from now? You know, what's your long-term view on things? So good news is 44% of them, once again, the functional collaboration, they expect to have an improved enterprise experience in regards to how AP works overall. So that is great news. Also, from my perspective, means that AP is broadening its horizon, is looking to work with the rest of the organization and how it can add value there. Interestingly, we haven't touched on this before, 31% expected some kind of adoption of cryptocurrency-led platforms within the AP department there. And if you think back a couple months ago, there was a lot of talk about Bitcoin and cryptocurrencies, and I wonder if that influenced people's comments to some extent. But the reality of the situation is there's new payment options that are always on the horizon. Cryptocurrency is certainly one that we will see more and more of. So it's great that organizations thinking, you know, the respondents thinking 5 years out, a third of them are saying, we think there's going to be a new payment option. And so hopefully they're starting to think about how we can leverage that. Should we be afraid of this cryptocurrency? Is it a boon for us? Start taking a look at how we can leverage it, you know, should it happen a few years out from them. And then once again, 28% also said that the intelligence hub for improving business spend management there, providing cash insights to the organization. I guess, you know, at this point, Doug, we talked about the 2 year and 5 year perspective of what companies are seeing. when you're talking to prospects and at your customer conference there, what do you hear that companies are looking at going forward in the future? Does this line up with what we said, or do you see something different? Doug?
Oh, sorry.
Okay.
Sorry. Yep, here we go. Sorry. Yeah, I think this is definitely in line with those kind of objectives that I hear from my clients, looking to bring those efficiencies and add some more value, and looking towards, yeah, there you go, that collaboration, being a better asset to the organization, helping the purchasing department make better decisions. That automation, obviously, that's where we fall. And then that intelligence hub too is those KPIs and having those metrics to be able to evaluate and move forward.
I think what's important too is when you're implementing a solution like MetaViewer or another one, is the problems for today, and that's probably why you're implementing the solution to solve many of the problems for today. But as these slides point out, you need to have an eye to the future. So buy a solution that can help you not only today, but also solve the future problems of what's going on. I'm always reminded of a famous quote from Henry Ford, which said if he listened to his customers, he would have built a faster horse. Obviously, the automobile industry was created from Henry Ford because he had to take a look to the future and what people were going to need. So the same idea holds true here, is take a look for the future, develop your strategic plan for what do we want to solve today, but 2 years, 5 years down the road, what does Nirvana look like if we could do anything within AP? How can we add more value to the organization? So as you're implementing and automating and changing your processes, don't just look to solve today's problems, because they may not be as important down the road as what's coming down the pike in a few years. So always keep an eye to the future that's here. Okay, so let's take a look at strategies for success. We asked our survey respondents, what do they think is necessary to be successful going forward there, to add value to the organization, and was very happy and pleased to see that 2/3 of them responded. The number one answer was smarter systems to drive more efficiencies. And this is great because it means that people are starting to think, people in AP are starting to think in the right fashion, at least according to the way I think, is that let's figure out, not throwing more bodies at this, how do we become more efficient? How do we add more value to the organization? So 2/3 of organizations are looking towards the future to be successful. Is how do we bring in smarter systems to help us do our jobs? The next in line, which was also great to see, was more than half said they needed better, more agile reporting solutions and analytic solutions to help them interrogate the data. So they're realizing that there's a huge amount of data that AP is sitting on, as I've said numerous times here. So in order to be successful, AP is starting to realize they need to mine that data. Internally and within Arden Partners, we've talked about having AP starting to hire data scientists in order to interrogate that data and to make value out of what's going on there. And some people would say a data scientist in AP, you're crazy. But a couple of years out, I bet you there are data scientists that AP departments are hiring. Not if you're a smaller organization, but in the medium or larger size organizations, data scientists are going to start to pop up because they're going to start analyzing this data. They're going to be leveraging these tools for better analytics, to do predictive analytics, to provide more insight into what's going on there. And then the next three items are fairly close to one another there. Too much paper, too many manual tasks. We'll get rid of all the tactical tasks that they're doing. And that's great because companies are starting to think, how do we become more strategic? Let's get rid of these tactical things that are not value adding. Nobody's in the business of opening mail up, extracting data manually off of an invoice into the system, tracking down a PO. That's not a value adding type proposition. How do we become more strategic? So if we get rid of those, we can have the opportunity to transfer these people from tactical tasks to strategic tasks. So what we've kind of harped on here throughout the presentation is adding more value to the organization. So we're glad that the organizations are looking that way in the future, and they realize what they need to do in order to be successful. So from a recommendation perspective, and we're coming towards the end of our presentation here. So recommendations, we've presented a lot of data here, and if you'd like a copy of the complete study, please let Doug know or Lori know, and they'll be happy to send you a complete copy of the study, which was 35 pages, I believe, of data that's there. Some interesting information in there. But as far as recommendations, you need to take a look at what AP is doing today and create a plan to get rid of these manual processes that are in place. There's solutions that are available and that have been available to help you eradicate these manual tasks. Take a look at those, because it's not a value-adding function that AP is doing by extracting that data from manually from a physical piece of paper. So take a look at how do we get rid of the manual tasks, and that's the first step in the journey. Then take as I said, if you don't know where you're going, any road will get you there. And if you can't manage what you can't measure, so take a metrics-based approach to improving AP efficiency and effectiveness. Understand where you are today. I presented, 15 or 20 different metrics and KPIs that are there. Those may be perfect for you. You may want to add some of your own based upon your own company or industry that you're in, but start measuring where you are. The only way you're going to get better and know you're getting better is to measure where you're at today, apply technology against it, and see the great benefits that you can achieve from this. I kind of touched on this on the previous slide. Develop a technology strategy for both immediate needs and next generation innovations. We don't want to just automate today's problems, because in 2 years, we may have a solution that doesn't suit the needs of the organization any longer. You need to solve for tomorrow's problems as well as today's. So take a look at your systems that you have in place. What can be replaced from a technology perspective? Many of us out there are using older ERP systems, older accounting systems, older data capture systems, or no systems at all. Excel may be the number one, accounts payable solution in your organization. That's not uncommon in smaller organizations or ones that have grown with, exponential growth. So take a look at how do we invest for not only today, but also tomorrow, to make sure that we solve our short-term and our long-term goals here. Also, take a look at, we talked about moving from tactical to strategic. AP can no longer, sit in its own cocoon within the organization. It needs to get out and figure out how it can work with the greater organization, how it can provide value to the greater organization. Yes, there's no doubt there's value in being able to pay your bills on time, get an invoice in, pay it on time. That's not an easy task, but there's so much more value to the organization that AP can add if it changes its perspective, its tact on its function within the organization, and say, we're not just here to pay bills, we're here to add strategic value to the organization. And what does that look like? We're changing our cash conversion cycle. We're improving supplier relationships. We're getting better deals with our suppliers. We're improving the use of capital within the organization. These are all things that are possible, whether you're a small company or you're a large company, and they're equally applicable. Small companies need cash just as much as big ones, if not more. Many of them, live hand to mouth. So if you can figure out a way to work with your buyers or suppliers and get your goods delivered faster and then paid sooner, so that it helps them grow, it helps you grow, it's a win-win situation. So take a look at how you're working internally with other organizations, finance, IT, treasury, procurement, as well as with your supplier base, and see how you can start adding value to the organization. And you're tracking this all along, once again, one thing that AP doesn't do, and I'll end on this note before we get to our questions, is AP doesn't do a very good job, I found, communicating the value and the success that they're having within their job function. AP needs to tell everybody what a great job they're doing, because they are doing a great job. It's not easy handling all these invoices and paying them on time. Start communicating. Start producing a quarterly newsletter. Start getting into management meetings and talk about, here's what AP did. AP saved the company this much money by paying these invoices early. AP did this. AP did that. Start communicating. Get into those meetings and get a seat at the table. Start talking the language of the CFO. Don't just talk about, hey, we processed this invoice quicker. The CFO is going to be happy that you're processing invoices quicker, but what does that mean to the organization? How does that add value? What KPI does that CFO or CPO have that you're helping to impact positively? Because when you start talking their language and how you're adding value to their job function, that's when you're going to start getting that perception changed and people thinking that AP is really adding tremendous value to the organization, because they are, but they've just done a horrible job at PR and telling people about all the great things that they're doing. So I think with that, we're going to get to the Q&A part of this presentation here. Bring Doug back in and see what questions we've received so far, if any, and if not, there's still time to chime in with your questions. Doug?
Thanks, Bob. Great information. I think all of us can kind of learn how to add value in our organizations, and I really like the concept of thinking more strategically and tactically, and I think we see that with a lot of organizations that we have to kind of help them grow. So as Bob said, definitely if you have some questions, I know he was pretty thorough, covered a lot of ground today. Certainly use the question capability, the GoToWebinar there, and ask a question. I'll open up the queue and read them. Otherwise, as Bob kind of put up here on the slide, some of our contact information. Shoot us an email at info@metafile.com if you'd like a copy of his slide deck. I can get you that information, or if you have questions about our solution or anything else that we can help you with and point you in the right direction. So appreciate everybody's attendance today. Looking at the question and answer queue, I do not see any questions there. We'll just kind of give a few more minutes here, and people can ask some questions. Otherwise, we appreciate your attendance today, and give you a few more minutes back in your day today that you didn't think you had to kind of start researching some ways to be more strategic.
Doug, also, if anybody would like a copy of the State of ePayables research that we did, they can also, in addition to the presentation, they can contact you at info@metafile.com and request a copy of that, because I know you're a sponsor of that report, so that may be helpful as well.
Yeah, absolutely. That's actually what I meant to say, not so much the slide deck, but I guess either or. Perfect.
If you want anything, just ask.
Yep, definitely.
And you'll be happy to accommodate.
For sure, for sure. All right. Well, I don't see any questions coming in, so I'm going to end the webinar here. Thanks everyone for your attendance today, and look forward to see if we can help you guys in your organization. Take care.
Bye, everybody. Thank you.